It's time for the morning trade, and we're looking here at UPS, one of the names that's reporting earnings after the bell. A name in the busy week of earnings. We have 184 S&P 500 companies reporting. So let's talk about this one. We have a preview. Caroline Woods is here, and you're telling us what the street is watching for when it comes to UPS.
So UPS reports tomorrow morning, and shares are basically flat right now. They're down about 11% this month, though. They've been under a lot of pressure, down more than 20% year to date, about 36% away from the 52-week highs. So safe to say the bar is pretty low for this report heading into it. We already heard from FedEx, of course, last month. Earnings missed analyst expectations. They cut their full-year outlook for a third quarter in a row, and they talked about this very challenging operating environment, including a compressed peak season and then severe weather events. So UPS up against the same macro environment challenges. We'll see what they have to say about that. Because of this dynamic environment, as they've already called it, they have been making some changes to their shipping options, focused on more economical and value-oriented options for their customers. They announced these two new ground shipping options, including Ground Saver for less urgent packages and then Ground with freight pricing for heavier shipments for the commercial small packages. They've said they plan to roll out enhancement to their premium portfolio later this year. We already know that UPS aims to reduce their business volume with Amazon by about 50% by mid-2026. That really weighed on shares earlier this year when that announcement was made, and shares have yet to recover from that. But the goal is to improve profitability and margins by moving away from those lower margin Amazon deliveries. So we'll look for any updates there. In terms of the actual estimates that we're looking for, you can see them on the screen here. Adjusted EPS of $1.42 on revenue of $21.06 billion. That represents about a 3% year-over-year decline. For the U.S. domestic package revenue, that's expected to come in at around $14.2 billion. International package at around $4.3 billion. And then supply chain solutions expected to come in around $2.7 billion. In terms of the outlook for the current quarter, analysts are looking for EPS of $1.84 on revenue of $21.34 billion. So that represents about a 2% decline from the year ago period. So continuing with these, the declines year over year that we're expecting for the current quarter as well. In terms of the full year forecast, they've already said they expect revenue to be about approximately $89 billion and then operating margins to be approximately 10.8%. So we'll see if they come with any updates to that outlook as well. So shares right now really essentially flat. FedEx slightly higher today, up about 1%, but UPS going a whole lot of nowhere ahead of this report tomorrow.
Yeah, and you mentioned the weakness that we saw in FedEx. You hear like how that they're trying to expand. They do Ground Saver and things like that to try and just get more business and do it in a cheaper way. An acquisition that they'll probably talk about. Tariffs that they may have uncertainty. I'm looking forward to hear if you saw anything on that. And I do see price targets, 130, for example, from Truist. They have a buy rating, but some of the analysts are still somewhat positive.
Yeah, we've seen some price target cuts heading into this report. If you take a look, about 56% of analysts still rate UPS as a buy. So the majority of analysts, 34% are in the hold camp and then 10% are in the sell. The median price target is 124.50. So that still implies almost 28% upside from current levels. So there is still bullishness on the street, about in line with what we're seeing for FedEx as well. 66% of analysts rate FedEx as a buy, so a little bit more bullish on FedEx than UPS. Yes, of course, we'll be looking for any commentary about tariffs. And if, the big question is it going to change the shopping habits, right? We've talked about, is there this pull forward and are people ordering more because of the fact that they think that the prices are going to go higher, but ultimately, will it change shopping habits? So we'll see what UPS has to say on that front as well.
Yeah, looking forward to that. I mean, so many companies are just withdrawing guidance altogether because they just don't know. It'll be interesting to hear what they say. Thank you, Caroline Woods, UPS tomorrow morning, as Caroline told us. So we'll look at that. And we also have trading now because Joel Hawthorne, head of equity research, Retail Trader magazine, you're with us and you're taking a look at UPS. And you actually have what you would do an example trade here for us.
Absolutely. Good morning. Thanks for having me, Nicole. Always a pleasure. I do have a trade here for UPS. I'm bearish, though, ahead of this earnings report tomorrow. The options market pricing in about a 6.5% implied move. The coincidence in that is that was roughly about a 6% move that was expected last earnings back in late January. The actual move there was 14%. So I don't think that we're going to get caught off guard by UPS, the movement here as they report tomorrow morning. But I'm going to sell some options to be in the market here. So I'm going to sell the 110 call, simultaneously buying the 115 call, both expiring July 18th. Those are the most active options traded right now, the July 18th expiration. I'm going to pick up a credit of about 80 cents. And my break even on that trade is 110.80. Right now, that range that we're talking about, that 6.5% move, is between $92.28 or so, all the way up to 105. So we're going to kind of play that range a little bit as best as we can on this trade.
All right, and then just the big picture. So you're feeling a little bearish on UPS, and I mean those are some big swings that you've talked about, from
Absolutely.
the last earnings to this. So we'll watch for that. Those options markets, price those in. How about this market this week? I mean, a slew of names reporting, Mag 7, and lots of economic data as well.
I'm so glad you asked, because I was going to commend you. I've been watching a lot of your commentary on the market, and I think you've been really spot on. I think we've kind of in that space where this is an interesting range that we're in. I don't think it'll shock anybody for us to be 200 points up or 200 points down in the S&P here overall. Right, we're right around that 5,500, and I think if we get to 5,700, I think obviously the bears are going to love that. But if we revisit 5,300, I don't think anyone will be shocked. I just really think right now these are just very, very volatile times. And I think it's more about some of the technical levels in the overall market, just as I think that's the bigger narrative, because, again, there's a lot of headlines, a lot of news, a lot of information coming out every day. And I think just being cautious about that.
Yeah, look, we're like pole position sitting in our cars, foot on the gas, foot on the brake, foot on the gas, foot on the brake. Don't really know exactly where we stand. Joel Hawthorne, great to see you. Thank you for the nice words. I appreciate that, Joel. Very kind of you. Head of Equity Research, Retail Trader Magazine. Thank you.